Hi, good morning. You're watching The Market right here on ET Now, and a bit of a weak day yesterday, and to add to that, you've got some weak cues as well to start off trade with. In fact, the dollar continues to edge higher. The risk rally is clearly on a bit of a pause. Yields are back above that 3.9% level ahead of Fed minutes. There's some bit of nervousness as to what the Fed commentary is going to be, and Brent as well continues volatile, so getting a little iffy out there.
So it's a start of a new year.
Sure.
Well, you don't know whether it's a trend or this in a sense is just a one-day effect. But frankly, for 2024, the very basic approach, and I'm talking about next couple of days and next couple of weeks, is that you should not be on the front foot. I think it's time now to come back on the back foot. Don't leave the crease. But it's not a time where you can swing your bat just about everything. Here's the data. In the month of December, Nifty was up 9%, 14% in last 2 months. And I think there are two basic assumptions which markets currently have. One, that 2024 FIs will come back and they will continue to bid the market higher. That's conjecture. That may happen, that may not happen, but markets are really relying on that. Second, nobody is talking about the fact that what will happen to the earnings season. See, markets have got re-rated because of sentiment, because of not earnings or not because of the real trajectory change in terms of the market, in terms of the corporate earnings cycle. So the re-rating is largely because of liquidity and sentiment. The concern is if liquidity does not come, what markets are assuming from FI front, then we could be in for a vacuum. And B, I don't think the earnings season is going to be all that grand, which in a sense will really sustain this kind of a market momentum. So what happened in the month of November and December, I think is history now. It's time to look forward and ask yourself, is that what is next? And that whole quest to find what is next, I guess right now, there is nothing in the system which could really generate upside momentum. So don't leave the crease, but don't be on the front foot. You got, it's like last 2 months if you've swung a bat on just about every ball, you've hit it out of the park. Yeah. I think now it's time to really wait for that loose ball. Instead of T20, come back to the test match style.
Yeah. Having said that, risk assets continue their flurry, right? Look at what's happening with Bitcoin. It's staying above 45K.
So Aisha, look, I'm not making a case that there is going to be a reversal. All I'm saying is that you need to change gears now. The kind of uptrend what we've seen in the month of November and December, that is unlikely to sustain, and markets are assuming as if this rally is just going to continue forever. That's not going to happen. Now I think let's wait for some more time to understand which way global markets are moving, because for us it was day 2, but for global markets it was day 1. But day 1, the handover from global market is that mean reversion has started, which is on the crude front, on the dollar front. The positioning of the market is such that everyone is assuming FIs will be back, dollar will remain weak, and commodity prices will start shooting higher. If that assumption is challenged, then I don't think market positioning is really prepared for it. So I'm saying that don't be cognizant of risk. You should take risk when valuations are strong. You should take risk when markets are, when valuations are strong, earnings are going to be strong. I think a lot of good news, I think, is in the price. And I'm hoping that we see a market which consolidates in the month of Jan, because if markets do not consolidate in the month of Jan, then they could really reach what could be called as a frenzy level or a bubble level. So for markets to remain healthy, a bit of a churn, a bit of a slice from the top, a bit of a adjustment, I think, is long overdue. And I think in the last 2 days, we've seen the evidence of that. I mean, we are not talking about it, but look at the PSU stocks, how they reversed yesterday. The data which we have in terms of the short positions which are getting added. So slowly and gradually, just 2 days again, guys, it could completely change. But right now, I think I'm not excited about the month of Jan.
The messaging is take it easy.
Take it easy. Seasonality is not in your favor. You've had a good November, December. Don't go short, but don't be in a hurry to chase.
Yeah, maybe don't aim for those 6s and 4s either. Just take it easy right now. And just want to quickly mark what's happening across the globe as well, because the tech-heavy NASDAQ came under acute pressure last evening. You also had Barclays, which actually downgraded the Magnificent 7 to underweight, and that really played out on the NASDAQ. This morning, a lot of the tech-heavy stocks in Taiwan, South Korea, they're also feeling the heat. And for the most part, the Asian markets are under pressure. So demand concerns was the main reason as to why Barclays went ahead with that downgrade. But speaking of our markets yesterday, and it was a choppy day of trade to say the least, 21,700 didn't even sustain. It was a cut of about 1/3% for the frontline index. You had the banks underperforming ahead of the weekly expiry, and more importantly, the mid-cap index that snapped its 7-session gaining streak, and you had pharma, which managed to hit a record high. So just looking at the overall texture of the market as well, Nikunj, and the kind of setup that we have with us at hand from the global cues, I wonder what the key takeaway will be.
See, January has not been a great month for us.
Yeah, see the seasonality.
The seasonality fact. And every time in the month of December, we get excited that, come Jan, flows will come back. Flows do come back, but market tends to price that in. What has been the narrative post the state election verdict? That FIs will come back. They will be forced to come back. What if they don't come back? What if they come back and, we don't see the kind of commitment what markets are talking about. So again, I'm just going to repeat myself and I say the following, that it's time to go on the back foot. You should exercise some caution, take some chips off the table. If you book some profits in outperforming sectors like, let's say, PSU, industrials, some of the rank manufacturing stocks, it's not going to hurt you. If you're in for a long haul, if you can digest a 15-20% volatility, if you're okay with, little bit of downtick in your portfolio, then just you don't have to be active. In markets, you don't have to be active all the time. There are times when you have to understand the trend, and I guess the trend and the indications what I'm getting when I speak to just about everyone is that don't forget risk. If the line I'm using, Aisha, for this year is, if luck made you money in 2023, 2024 it will be skill.
Yeah, and the brokerages are pretty much voicing the same, that it's banks, they offer the better risk reward, and that FII flows will improve. Everything from a Jefferies to a Citi to Bernstein.
So what is the crux? Nobody is talking about, everybody is bullish, which means the Nifty targets are north of 22,000 to about 24,000. Within that, there is a play on domestic economy, which is everybody prefers industrials, everybody prefers financials, and select Indian, domestic inward-looking companies. But whether you look at the summary from Citi, you look at what indications you've got from Jefferies, you throw in a Bernstein report, I guess the common thread which ties all of them is that valuations are not exactly very strong. It will not hurt you if you book profits. We are in for 2023 surprised us, but 2024 you've got to be cognizant of election, events, valuations, and where the positioning of the market is. Aisha, I think next few weeks it will be all about sentiment versus earnings. Sentiment will be a function of flows, and earnings will be a function of the reality.
Yeah.
Which you look at the data which has come out, and the first initial updates have come out. We'll just flash them on the screen. D-Mart, V-Mart, the kind of indications which we've got from other companies also. This is just the initial setup, but look at, that's Bernstein for you. I mean, that's some of the portfolio positioning. But let's look at the quarterly update. Do we have that? Just come up in a second. There you go. That's Bank of Maharashtra. Look at, for me, retailers are an important indicator. Banks are in a good groove. So banks may not be a harbinger of what, essentially is doing. But look at, let's say, D-Mart, V-Mart. There is a bit of a slowdown. Auto sales numbers which have come out, they don't look all that exciting. So that's my limited point.
Yeah, it's been a weak Q3. That's what Avenue Supermarts is indicating, where the same-store sales growth at 4% plus for the quarter is actually weaker than what the street was penciling in. But back to the global cues, let me take it across to Vinny, find out what the commentary has been like. Vinny?
Good morning, and absolutely the first day that the US market was open for the year. Finally, we have some commentary starting with David Rosenberg. In a tweet, he's highlighting in terms of the S&P, a bit of a subduedness in the weakness that we saw in the overnight trade for the US market. So he's talking about that they are expecting a retracement now that could be seen, especially from the rally that was seen from October to December. So now maybe it's time that we could see a retracement. He's saying that using the FIBO retracement, that would imply a move to at least a 4,000 13,530 on the S&P 500. So a bit of a retracement, a bit of a downtick is what he's expecting in terms of the S&P 500. Other than that, we have commentary that's come in from Peter Schiff, and this is on the Bitcoin up move that we have seen. What has always been supporting the Bitcoin up move is the news flow coming in terms of the ETFs that are going to be launched. Now, that was always in terms of the speculative demand that we saw previously, but now once this ETF, Bitcoin ETF, that's going to be launched, he's saying that one should be aware that if, we do not see good demand that actually comes in for these Bitcoin ETFs, then there could be a fall that one could actually see, and new investors demand is going to be a very important factor for the Bitcoin now in terms of an up move that is expected. But one that one should be aware, there are possibility that if the institutional buyers do not come into this, then we could see a downfall coming in for Bitcoin prices as well. Lastly, let's just talk about Apple. We have commentary that is coming from Barclays analysts, and they are highlighting a weakness that they're expecting to see in terms of Apple. Apple yesterday in trade also fell nearly to 6.3%, which was a 7-week low, because they said that, overall there are concerns that could come in terms of the demand for devices for iPhone as well as Mac products as well, which could remain weak in 2024. And because of that, we're seeing a fall in Apple. Not a very great commentary that came in from Barclays on Apple, keeping some pressure on the stock as well.
Vinny, thanks so much for giving us that snapshot as to what exactly the outlook is when it comes to the global commentary. But let's connect then with Anurag Singh, managing partner as well at Ansid Capital, to talk a little bit more about the overall global setup right now. Thanks so much for taking time out. Anurag, let's just get in a sense as to what you believe is really going to be, the call for the year ahead, given the fact that actually, incidentally, across the globe, there's 40 elections that we will be mapping out. But that aside, how do you see the overall sentiment shaping up for the year ahead? Is it going to be volatility that will be the name of the game?
Yeah, Avan, good morning. And I think I partly heard what Nikunj and Aisha had to say. And look, I think the thesis is right. We are at a point where everything is almost richly valued, right? So it's very hard to find value. Of course, in US, there are pockets of value. Indian markets are very richly valued across the board. So the year, at least if I talk in terms of US markets, I think what we are focused on is trying to park money towards the Russell 2000 stocks, which are more the mid-cap, small-cap stocks, or S&P 600 stocks, plus the financials and consumer discretionary, which did not have a good run. We all should be mindful that just about 7 stocks contributed to about 80% of the rally last year, except for the last 2 months, which were pretty broad-based. I think so that's where the value is. And I think today, if we saw a bit of a glimpse that some money is moving out, at least at a ETF level, money would move out from NASDAQ more towards these S&P 500, S&P 600 or Russell 2000 value-based stocks. That's where we are. It's not very easy to find value. It's richly valued, and you will have to struggle a bit, Avan. That's the broad thesis.
Is it too early to assume that the macros are reversing in the world, Anurag?
Yeah, Nikunj, that's where we are stuck. I think it has become, and I think we should be a little fearful that a bull case and a soft landing has become pretty much a consensus case. And I think that's exactly when the trouble strikes. We don't know from which pocket it will come, but I think market doesn't have too much appetite for bad news because it is already discounting, the rate cuts starting March, April, right? So we'll have to be mindful. But I think on the face of it, it looks like that there is no apparent risk, at least not to the US economy. And, Federal Reserve has a buffer, Nikunj, they're already at 5.5. In case some trouble hits, they can always use that Fed put and come down and cut rates. So at least in US, there is no trouble on the horizon that we see, at least, which can't be met with a Federal Reserve move. India is a different story, Nikunj. I think that's a bit of a different game, really.
Thanks very much, Anurag, for joining in and sharing with us your perspective on the globe. Let's move right on and connect with our chartist, Nooresh Mirani, joining in. And we've also got Kunal Bothra. And choppiness was clearly evident in the markets yesterday, Kunal. Give us a sense as to what you make of the underperformance that we witnessed in the mid-caps, as well as the fact that the pharma index was at record highs.
So, good morning, Avan. There were two distinct data points which happened on the markets yesterday. One was the emergence of call writers, which I think over the last 1.5 to 2 months, specifically from the November, mid points, it was a bit missing in the market, data points. So that generally indicates that we are now looking at a ceiling or a resistance for the index over the very near term. So 21,700 and 800 call options had seen a good amount of writing, and for the bank Nifty we had seen in the money to at the money strikes being written, and that generally is an indication that the call writers are expecting that these levels may not be crossed on an immediate basis. On the other hand, we also saw the bank Nifty seeing a 11.5% jump in the open interest. That with a 500 point kind of a downtick on the bank Nifty indicates that there's been a good amount of short built up on the bank Nifty. So both of those data points indicate that the market tilt for the next couple of days should be on the slight downward tone or a mild drift for the for both the indices Nifty and bank Nifty.
Nooresh, hi, morning. Are you as well advising caution?
So expecting a consolidation on the Nifty as well as on the bank Nifty, because the current move did not see any follow-up as such. We've been seeing a lot of intraday volatility for the last couple of sessions wherein we see corrections. So this is generally a case wherein we are possibly getting into forming a new range. So we need to see whether this range goes towards that 21,400 to 21,200 mark or a little higher. On the upper end, 22,000 odd levels should remain a resistance. So expecting more of a consolidation on the Nifty and Bank Nifty, and then we continue to see stock-specific action. Because when we look at charts on the broader markets, there are a lot of consolidation breakouts. So overall, looks like more a stock-specific market, more shift happening towards the mid-cap and the small-cap side of it.
Let's talk stocks then. Kunal, what's on your list?
So I'll go with a couple of buy calls, but both of them are a bit underperforming names which are trying to make a comeback for themselves. AB Capital is the first stock which I would suggest as a buy. The stock making coming back about that 160, 165 levels yesterday. So would suggest a buy with a target of 180. Stop loss could be kept at 165. And ITC is also another stock which has made a good comeback. In fact, the last 3 days the stock has moved up from 460, 465 to almost 470 plus levels. So expecting another follow through up move for ITC. Targets of 485, stop loss at 462.
All right, let's find out what's on Nooresh's radar. Nooresh, take us through your top ideas.
So first is the buy on Container Corporation, Concor, with a stop loss at 855 and a target price of 950. The stock finally broke out above the 800, 840 mark. Then after that breakout, the stock has been forming a flag formation for the last few sessions. Yesterday came close to the breakout of a flag formation. So expecting a follow-up move on the stock. So a target price of 950, stop loss at 855. Second is a buy on Syngene with a stop loss at 705 and a target price of 780. We've seen strong moves across the pharma space from large caps to mid caps. Syngene has corrected a couple of times, made a double bottom around 680 level. So a strong base done here. Sure, a risk reward trade here, expecting a bounce in the short term for the stock.
There you have it, all your top recommendations being flagged off by our chartists in trade. Let's get a move on. Lots of stocks to track today. So let's get straight to it with Samit, who is right here with us in our studios. And let's discuss then the big block deal with RK Damani, Samit buying stake in VST Industries.
Well, yes, he bought around 2.2 lakh shares, increased his stake by another 1.44%. Now, the sellers in this deal were HDFC Mutual Fund and DSP Mutual Fund. But why he must be increasing his stake in VST Industries? Firstly, the government policy towards cigarette has been pretty much rational, and what the market chatter is suggesting is that there won't be any announcement related to cigarette in the upcoming budget, and no news is actually a good news when it comes to the cigarette industry. Apart from this, branded players have been gaining market shares from the unorganized sector. VST Industries as a company has been expanding into different geographies, which will also boost their volume sales, and management has been taking efforts to improve the cigarette volume growth, which should be meaningfully visible from the next financial year. As per what analysts have been speaking to the company, this is what we have gathered. And one thing that I guess none of us might have predicted or expected in the street is that though we talk a lot about ITC as a cigarette company or stock which has given good returns, but over a period of time since 2001 till now, if you see, VST Industries CAGR returns has been higher than what ITC has given. In fact, from 2001 till now, if you see VST Industries CAGR return has been around 16%, while that of Nifty has been around 13%, and ITC CAGR returns have been around 14%. And valuations are still cheaper for VST Industries when compared to ITC.
And pretty much very few players out there, right, to bet on.
See, the cigarette market in India is actually dominated by ITC, and they have lion market share, which is more than 3/4 of the market share, and then you got Godfrey Phillips. VST Industries actually is a subsidiary of ITC. We don't realize it actually. Yeah, we actually don't realize it. Now you got to understand is that this Mr. Dalmia has been holding on to the stock not for months, not for years, for decades now, and he actually bought into a stock with. He bought. I mean, there was some common offer which
Samit
was
would
there.
know, I think, better.
Well, yes, there was an open offer done back in 2008, I think, or
Was a
2001.
subsidiary.
It was a subsidiary of
It was a
ITC,
subsidiary.
but they sold their stake to Mr.
Exactly.
Dalmia.
It was a subsidiary long time ago, and then this stake moved here. He's talking about years here, and the kind of way in which how Mr. Dalmia invest, he clearly would have taken a view that, look, this is a large investment I have. I would like to increase my large investment because I think there is going to be growth and there is going to be visibility. When you have a category where no large new players are coming, when you have a category where stocks are available cheap, when the worst is behind us and you have already large commitment there, and if cash is available to you, I think you will be happy to invest. Now, what our viewers should infer, I mean, our viewers should understand that he is an ultra HNI, and when he is investing, his risk and his time and horizon is very different. So don't get excited just because he's increased his stake. But if you are in for a long haul, if you can think in terms of not years but in terms of decades, these are businesses which will continue to compound. And it's just then you realize that, you know, these are businesses which you, in India, if you've been holding on to just consumer facing businesses, Titan, Trend, ITC, Nestle for years now, what kind of compounding magic they've done. So investor of his size, and investor of his pedigree, and investor of his of his aptitude, they normally think in terms of years. They buy simple businesses and they just simply hold it.
Yeah, absolutely. But on the other hand, rumors abuzz for Vodafone Idea Summit. What's the latest? Almost on a daily basis, you hear something.
Well, to the circle that I speak to, or to whom I connect to, Vodafone Idea, in fact, is considered as one of the best shorting ideas for them. And few things that I just saw was the stock has continuously gained for 9 consecutive months. Not even in the last 9 months, even single time the stock has given a negative return. The prices are up around 2.8 times, and there is no fundamental reasoning to support this kind of price move when it comes to Vodafone Idea. It has just been about rumors. Now, if you see the target price given by the analyst, whoever is tracking the company, it ranges from 1.5 rupees to around 11 rupees, and the average potential downside for Vodafone Idea on the base of this target price is close to 60%. Now, what are the headwinds that Vodafone Idea is seeing? Firstly, there were some market expectations when it comes to the telecom bill that there might be some respite given to Vodafone Idea. There might be some clauses which would give a respite to Vodafone Idea, but nothing like that has come in. There is no possibility of a tariff hike at least until elections. That is, at least for the next 2 quarters, there won't be any tariff hike. The fundraise guidance that the company has been giving has been continuously missed, and in fact they had earlier said that they would complete a fundraise by December 2023, which has been missed by the company yet again. Now, why the possibility even of a fundraise looks bleak? Now, do remember that government had bought around 33% stake, not bought, in fact converted that debt into equity, and they got around 33% stake, and this conversion happened at around 10 rupees per share. So just logically, even if you think any investor, any large investor coming into the company, investing a large sum of fund, why would they pay anything more than 10 rupees per share, given the fact that government of India has got a share at 10 rupees per share? But if you see the SEBI regulations, and based on the jump in the share prices that we have seen, in fact SEBI regulations won't allow any preferential issue at a price of 10 rupees, because given the fact that share prices have been in the range of around 14 to 17 rupees, any preferential issue, even if there would have been a fundraise, would need to be done at that price. So most likely any investor would defer or would not choose to put in money in Vodafone Idea, given that the share price will also be not in favor for them.
Summarize it very well. Now, let's think about it logically. Has the stock gone up because anything has changed in telecom sector? The answer to that is no. Has the stock gone up because there is a buzz, there is a view, there is a rumor, there is madness of crowd, there is this, whole halo, if there is this whole, momentum and rising tide phenomenon which is there in some of the two-digit stocks because Vodafone is large, it's liquid, it is got a big presence in the F&O market, the answer to that could be yes. Logically and theoretically, it's a business which was bailed out by Government of India. Do they need capital? Of course they need capital. But if markets are assuming that there is going to be, after government rescued them, there is going to be a white knight rescue called Elon Musk, which is going to come and pick stake in Vodafone, and that's the reason why the stock went up. Guess what? The denial has already come through. So if markets were excited about Elon Musk picking up stake in Vodafone Idea, that has been denied. If markets are excited about the fact that a new fund, a capital infusion will happen in Vodafone, it may happen. But you should not invest in a stock where there is frenzy and stocks are going up largely because of rumor. Is it a business which is struggling? The answer to that is yes. You may bail out Vodafone Idea with more like a bandit approach, but seldom I've seen that when companies are rescued with a bandit approach, the bandit approach does not create shareholder value. Yeah. So don't get trapped into the momentum. There is momentum in the market. There is nothing. That's the way how markets move. But the choice of whether you want to participate in the momentum and whether the risk reward ratio is favorable or not, I think in Vodafone Idea, I'm afraid it's not in your favor.
Elon Musk is going to be in Gujarat at the Gujarat Global Summit. I'm wondering what's going to happen then in terms of the rumor mill. How many companies there will be news that he's buying?
One of the reporters would ask him
about Vodafone Idea.
No, but government has denied it. The government has denied it. So if the government of India has denied it, because government of India is the owner of Vodafone, so I mean just rest the case that nothing is happening, at least on that front. They will get fund infusion. I think existing set of investors, whether it's the Birla or Vodafone Idea, they will infuse. In fact, we've done a story, I think Anurag's done a story 3 weeks ago or 4 weeks ago, that Birlas are looking at raising money in Grasim, and that hopefully that money will come back into Vodafone Idea. They're desperate for cash. They need to be bailed out. But to assume that they will be bailed out because Elon Musk is going to come and hold their hand, I think that is something which is slightly far-fetched.
Okay, on that note, we're going to take a very quick break. Come right back. We'll address all the other stocks in news this morning.
Thanks for staying on with us. Still tuned into the market. By the way, you did have the rally on the Nasdaq faltering after a lot of those tech-heavy stocks came under a bit of pressure. Asia too is looking a little bit tempered. But this morning we're tracking news then across the board, and the truckers have actually called off their strike last evening at 10 p.m. after the assurance came in from the government against the new hit-and-run law. Now, the centre has assured that the law will not be implemented without consultation with the truckers. There was panic buying for fuel that clearly gripped the nation. Chandigarh had capped the fuel sale. Mumbai is now urging people not to throng petrol pumps. Let's get on all the latest details. Astha joins in with that perspective. Astha.
Absolutely, the protest from the truckers has been called off after the new provisions of hit-and-run case have been put on hold. But there is still panic, we can see. Yesterday, if we talk about the situation was poor, the petrol pumps after 4 p.m. were full with people. And there were 50 to 60% more of footfalls in the petrol pumps. You can see that. We talked to the managers of the petrol pump, and they also said that usually they sell off 3,000 liters of petrol, but now they yesterday after 4 p.m. they sold approximately 6,000 to 7,000 liters of petrol, and they have to call the police to control the footfalls in the petrol pump. The petrol pump was open till 11 p.m. but after that the police had to come and control people because there was a lot of panic among the people, and they were afraid that there will not be much fuel left, so there were queues. And since morning at 6 p.m. From the 6 a.m. in the morning also, the petrol pumps were filled with people, and the people are still asking for their tanks to be full. But the managers of the petrol pump have said ki no, they will not give them the full petrol pump, and they are giving literally 50% half what the consumers are asking for. So still the managers are worried that the petrol pump after 9 a.m. will be full. But we can see the conditions are easing off a little bit, and they are hoping that after later in the afternoon the petrol pump will be experiencing less footfall than usual.
Hopefully the crowds should recede. And the takeaway from Astha is, of course, that the strike has been called off, as was reported last night itself. But the RBI's proposed rules for banks' dividend declaration aims to ensure financial stability. In fact, dividends will be allowed if net NPAs are below 6% and banks must meet the regulatory capital requirements for the past 3 years. Ankur Mishra joins in with more details.
Yes, in an interesting proposal, the central bank has said that if any bank is declaring a dividend, there needs to be few stricter criteria as per the draft circular. The proposal say that the net NPA should be below 6% for declaring dividend. If you compare it with current norms, the last circular of Reserve Bank of India had said net NPA can be around 7%, and now this circular has proposed a stricter limit for net NPAs to be there in a particular year if any lender wants to declare the dividend for the shareholders. Apart from that, there are other conditions as well. There are also conditions for meeting the minimum capital requirements. Now, these capital ratios should be met on a 3-year basis for any lender to declare dividend. And these limits, if you call for banks, will be 11.5%. For small finance bank, the limit will be 15%. And similarly, if you talk about a local bank or regional rural bank, the limit is prescribed by Reserve Bank of India at 9%. So all these minimum criteria needs to be met before any lender plans to declare the dividend for shareholders. Now this has been done because it wants to align with the different rules which are already there, especially the prompt corrective action where 6% net NPA limit is already there. So these rules are now released by Reserve Bank of India. It will be left on the stakeholders to comment on these issues, and finally central bank will take a call.
All right, thanks for those details then. And you also had the RBI, which met with some of the top bosses of the credit information companies and flagged off the rising concerns related to these consumer complaints. Ankur?
Yes, the Reserve Bank of India has flagged off the concerns to credit information companies. Now we understand these concerns were highlighted during the meeting which was held between the CEOs, MD and CEOs of CICs as well as Reserve Bank of India. From Reserve Bank side, RBI Deputy Governor J. Swaminathan has said that there is rising complaints of customers against credit information companies, and that was brought to notice. Apart from that, he also said that there were concerns which have emerged after the supervisory assessment of the central bank. In fact, the Deputy Governor has suggested 6 key areas to improve, namely the need to improve the data quality, timely redressal of customer complaints. He also mentioned that strengthening of internal ombudsman system is something which CICs should work upon. Apart from that, streamlining the process of handling data correction he has also requested for improvement in the data security, cyber security of the CICs, and also maintaining the privacy of the data. And all these discussions happened during the meeting. From CIC side, we also understand that there were issues which were highlighted and brought to the notice of the central bank, and for all the issues, the patient hearing was given by the central bank. And also there has been a promise that a similar kind of meeting is likely to be held later after the CIC's work on improving in all these areas.
Okay, Ankur, we'll leave it at that, and let's welcome on board Sanjiv Bhasin as well and figure out what he's making of the market right now. Sanjiv, hi, good morning. Good to have you on the show as always. You think it's time, Sanjiv, to tread with caution a little bit? Given the January seasonality, it indicates to be so, or you think we could see the December kind of momentum this month too?
Yeah, good morning, Aisha. I wish we could see the December momentum, but wishes cannot be horses. So there will be uncertainty, there will be little volatility, which is part and course of the markets after running up so sharply. We are of the view that take some chips off the mid cap, small cap, get into some of the large caps. Large caps are giving you comfort. There will be a lot of FI buying, by the way. and that will be more concentrated on large caps. Yesterday, you saw one single downgrade on Apple is down 6%, Nasdaq is down 250 points, and banks, actually regional banks and banks over there, the bank index is now one of the best performing indices. So I think banks are going to be more proxy. They are large cap, they are heavyweights. So just see a bit of, take some money off the table on your mid cap, small cap portfolio. Don't get lured by the feeling of missed out, but be in the market. So we are more tilted towards the large cap banks, pharma, and so on.
So let's have your large cap list. What within pharmaceuticals would you recommend buying right now?
So we have an overweight on Dr. Reddy and Lupin. We are very, very bullish on Lupin, and we have been there from 750. In fact, yesterday also on your Hindi channel, my Lupin was my top pick. It was up 6% against the market. And in banks, ICICI market cap of ICICI Bank is now 6.89 lakh crore. So, another 150 lakh crore will mean that this will be another entrant into the $100 billion club. And I am looking at those milestones. I think ICICI is a perfect case for that. It will be the biggest beneficiary of CASA ratio increase, the low-cost deposit, and the sum of parts of businesses. So I am giving a thumbs up to ICICI as a entrant into the $100 billion club, which means you can see at least a 15% upside in this stock. And second would be Kotak. Arguably, the new helm is going to now lead from the front. They have all businesses which are firing on all cylinders, whether it's AMC, whether it's insurance, whether it's securities. And I think Kotak at this price gives me a lot of comfort. So two large caps over there, and Dr. Reddy and Lupin on the pharma side. We also have, as a disclosure, BPCL under our radar, which we think can be an outperformer.
Sanjiv, morning. Given that you're pretty bullish on Vodafone Idea, just wanted to get in your take on the recent news reports that have completely ruled out any investors for Vodafone Idea, particularly billionaire Elon Musk, given that there were some rumors floating around. So no discussion, no real peg coming in. Do you think that may have been fueling the stock up move and now things could change?
Yeah, good morning, Avan. I was bullish at 11 rupees. At 18.5, I was not bullish. I mean, we have booked across the board. We are not in the camp which will buy on rumors. The real value lay at 11 when you saw the ARPU strengthen, the government take a stake, and I reiterate, there will be infusion of capital by someone unknown or the promoter. I still think any decline will be a buying opportunity. But as a disclosure, 11 was a very, very fair point for us for our risk reward. At 18.5, there will be rumor mongering and there will be volatility. But the stock has more than doubled in the last 4 months. Please take that with a pinch of salt. And like I told you, that the real value lies in unbundling when you can, have the risk reward. I'll give you a similar example. At 9.5, 10 rupees, I gave JP, which was the most hated share. It yesterday hit a new high of 23.5. Now, we are not asking you to chase it over there. Do your homework, do your legwork, and when you get these opportunities, some of these small or large or debt-ridden companies can be huge outperformers. Right now, we have a hold on Vodafone, but we will wait for more news flow on the infusion of capital before taking a next move.
You to read the charts of both JP Associates as well as Vodafone Idea.
So Vodafone Idea, I think after that 2 or 3 days of strong, swift, sharp up move, I would actually believe that the stock may go into a couple of months of consolidation, because that's been the nature of the stock over the last many weeks and many months. We've seen the stock moving up even prior. I think in the month of September, October, the stock was almost at 11 odd rupees, 11.5 odd rupees, and from there the stock moved to 13.5 to 14 in a matter of 3-4 days. And then what followed was 2 odd months of consolidation for the stock, where it retraced back most of the gains and then came back towards its key moving averages, a 50-day moving average particularly. I think from there the stock moved up higher. So again, it was a 3-day up move, strong up move for Vodafone Idea. My sense is that the stock would probably get into a couple of months of consolidation. So anyone who's looking to buy the stock should wait out for a good amount of time-wise as well as a price-wise correction to try and chip in. JP Associate and JP Power, because I think both of these stocks, they tend to move in tandem. Both of these stocks are showing signs of a breakout for themselves. But again, I think, with the larger construct of the market, we'll need to see whether the market gets into a strong risk-on phase from here on, which I believe may not be the case. So I think having a smaller position size into these kind of breakout names could be a better strategy.
Let's look at SGX Nifty, please, or GIF Nifty. I need to get used to calling it as GIF Nifty now. SGX Nifty nahi hai, it is GIF Nifty now. Muscle memory sometimes just forces you to say SGX Nifty. Okay, 73 points lower, which means we will open at in and around 2160, 680, 21,670. Nooresh, what is the support point? And if markets go to the support point, would you be a buyer today?
So the price point where there is a lot of support in the near term is closer to 21,400, 500. So would not be a buyer as soon because we've just corrected, say, 200 points from the top. So would wait for a risk reward entry point closer to the 50% of the retracement. So we've, say, gone up 800, 900 points and we go down 400 points closer to that 21,400 to 500 band. That's the price point I would like to initiate fresh positions.
Will you be a buyer if markets slip to the support point today?
So I think, according to me, the supports for the index is closer to 21,000, 21,200. So I'm not sure whether the index would probably scale down to those levels, but that's going to be a point where, in case if there is any kind of a steep correction or a sudden correction, I think one should try and take advantage of.
All right. In fact, let's focus in on the PSU space, and will the new year mean more cheer for these PSU stocks? Well, we spoke with some top market honchos, the likes of Hiren Ved, Ramesh Damani, and even S. Naren. Hear out what they had to say.
In PSU, again, one more thing that we look for is there a right to win? Most of the PSUs don't have any right to win. What they need is a general bullishness in the economy for the stocks to do well, which is what they have been doing. The day there is going to be some kind of a dip in the economy or any kind of a challenge, that is where these companies will suddenly the men and the boys will get separated.
Longer term, the way their balance sheets have improved, I think general policy has been quite supportive to creating value in PSUs.
My personal feeling is that the leadership, as I keep telling, is very much intact with the public sector stocks. They probably have a largest way to go still, because typically if you see in the bull market leadership, the stocks go up 10x, 20x after some point. So I would remain invested in good quality businesses.
Look at the index, for example, the PSE index. Clearly, we have been much more positive on power within the PSU theme than other areas, because we felt that the power generating areas are still more reasonably valued compared to the other areas. And we have been more positive on the upstream areas in the PSU theme, because these were the two themes where the price to earnings was much more reasonable than many of the other PSUs.
Sanjiv, in terms of a portfolio allocation towards PSU specifically, should one take 15-20% profits off the table?
100%. But take it with a little bit of this thing that these most of the fund managers, particularly some of the PMSs, have been they said PSUs are taboo, and you cannot have a view which is inelastic. Go with the market. REC, PFC, NTPC, Coal India have gone up 3 times. What more do you want? So if you missed out, you are underperforming the indices. This is a time of where money has been made, Nikunj. So 35, nobody wanted to touch. NBCC at 91, 90, everyone falls in love. It is not that. It is just that the sheer ownership of some of these stocks can be frustrating, but time lasting. Now, I definitely take some money off. And like I told you, I am very, very optimistic on the banks. I think their lending growth, their NIMs, their CASA, all are looking good. So stay with large cap. If ICICI is going to go into the $100 billion club, it gives me enough comfort. So is a Kotak. So is a smaller bank like DCB Bank. We are looking for those ideas. PSUs are the ones which are the flavor of the day, the high beta play, which make money on a daily basis. But here you must take some chips off the block.
Take the chips off the block and keep the money in banks, or buy something else?
No, there is no such thing as called as sitting on cash. it is better to be in large cap banks. I still like three PSUs: IRCTC, Concor, and IEX, and we are invested in those as a disclosure. They have just started to perform. We are up about 20% on our portfolio on these, but we will not change the business outlook. Concor, IEX, and IRCTC have a superb business model. It will only gather stream. The earnings and the price performance will be a little bit of a laggard. But yes, do shift your portfolio. I mean, Aziz is looking very, very set to go to 450 this year. So is DCB Bank. Paytm is giving you an opportunity to get in now, because I think most of the humdrum on exits is over. This stock is again headed to 1,000. So do your legwork, do your choosing, find your right RM, look at IFL Securities or whichever brokerage you follow. Because Nikunj, the cardinal principle is, if you have a PMS or a mutual fund NAV, you are in the market. There will be a plethora of stocks rotation, but the fund manager keeps the rotation going. That's why you will be able to sit at maybe 24,000 also. But you will have to see even 19,000 maybe if the volatility persists. So the only mantra to creating wealth is staying invested. Let the fund manager do the sectoral shifts, or if you are smart enough to do it yourself.
All right, good to have you on board, Sanjiv. Thanks for joining in. Let's welcome then Chakri Lokapriya, who's joining in on the show as well. Chakri, thanks so much for taking time out. I wonder if you track VST Industries, only owing to the news with Mr. R.K. Damani now upping his stake, of course, for the long haul. How you've read into this news and whether you track the company at all?
Good morning and Happy New Year. No, this is a sector which we don't invest in much, and so I wouldn't really be able to add much value on this.
Sure, you'd be able to add value and give us a sense as to what the outlook is when it comes to PSUs as a whole, because a lot of top market experts we've been interacting with seem to be of the view that the year ahead as well could look fairly promising. Your sense after the heady run-up?
Indeed, as we go into 2024, and I think PSUs are still very well placed. Some of the PSUs, of course, have run up very sharply, but their valuations are still not demanding. Now, why have they run up? If you take PSU financials, basically their balance sheets are very strong, NPAs are very low, credit cycle for corporate government capex has picked up, will continue to do well. So when you have three main ingredients on a strong balance sheet and a low, then you have upside on which is pretty much intact. The second, in terms of whether the industrial space, again, whether it is the power sector or the infrastructure space, again, there is this multi-year shift to green energy, shift to infrastructure spending, which again goes to some of the PSUs get the first orders, whether it is the NTPC, NLC, companies like that, BHEL will continue to win. So I think there are still enough money, there's enough money to be made in the industrials and the financial space within the PSUs.
Citibank is calling HDFC Bank as their big pick, followed by Indus Tower and Cipla. So I'll repeat the names again. HDFC Bank, Cipla and Devyani and Indus Tower. Do you agree with them, Chakri?
Yeah, no, HDFC Bank, clearly, yes, the company has underperformed. There are some merger integration issues which has led to an increased cost of capital for the business, for the bank, for the new bank. That's likely to kind of even out in maybe another 2-3 quarters. The valuation is about 3.5 times book. Loan growth for this combined entity has to pick up, which it will as interest rates start moving down. That is, when RBI and when the US and RBI hit a peak and thereafter start cutting rates, HDFC will start benefiting. At that point, you will have a rupee appreciation, hopefully, that will bring in FII inflows, which again goes towards the largest weights and HDFC Bank benefits. Now, in terms of Devyani again, the QSR space is finding it very tough in terms of margins, and that's unlikely to change anytime soon. Consumer has been sluggish, will likely to be so for the next couple of quarters. So I think that has a space, and valuations are still quite high for Devyani. Now, if you look at for Cipla again, I think it's the companies like Lupin are better placed than Cipla because they have new product approvals, margin uptakes, a lot of business levers in place.
All right, there you have it. That's the view coming in on some of those stocks. But let's move on then to the brokerage radar. Fresh brokerage notes coming in this morning. Federal Bank and M&M Finance on the brokerage radar. Let's get in Gaurav, who joins in with the details of those brokerage notes. Gaurav?
Yes. So first we have got some business updates from banks, which is Federal Bank and Mahindra and Manat Finance. So let's first talk about the Federal Bank. So according to the business updates for Q3 FY24, they believe that the customer deposits have grown almost by 18% YOY. Total deposits have also grown in the same line by 19%, and the gross advantages have also increased by 18%. If you talk about the CASA, it has grown by 6%. And on the back of this update, we have some brokerage notes. So first we have Nomura, which has maintained its buy rating and a target price of 190 rupees. They believe that NIMs are likely to be stabilized in the coming time, and they also believe that asset quality is also going to remain in the same range. But if you look at the advances and the deposit growth, it was actually moderate, is according to what the brokerages are saying. We also have Citibank, which has again maintained its buy rating, but the target price of 170 rupees. They believe that we may see some kind of cost efficiencies to stabilize from here on, and the credit cost is also going to provide some support to the bank from here on. And they also believe that NIM's trajectory is something to be a key watchable for the stock. We also have Morgan Stanley on the Federal Bank, which has maintained its equal weight and a target price of 165 rupees, because they also believe that advances growth and deposit growth was somewhere in line and tad in below what the street was expecting. Let's also talk about the Mahindra and Mahindra finances, where the overall disbursements were actually a little weak. They grew only by 7%. Collection efficiency, although, has improved to 98% versus what it was at 94% in the last month. And the stage 3 assets have also improved for the bank, and they are likely to be at 4% according to the bank's updates. And on back of this, now brokerages see that Citibank believes that they have maintained the buy rating and the target price of 350 rupees. They believe that disbursement should support the 27% growth in AUM YOY.
Chakri, if we frankly look at HDFC Bank and ICICI Bank, okay, 2023 was not such a great year, but it was a great year for IDFC Bank. It was a great year for IndusInd Bank. It was a decent year for Axis Bank suddenly in the last one quarter. Which, to your mind, from the small and the mid-cap banking space could be the standout mover?
I think, IndusInd Bank, while it's done very, very well, that's a bank which will continue that can do well because as the corporate cycle picks up. Second is, ICICI Bank, of course, will do well because it has a very healthy mix of both corporate and retail. For all these banks, whether PSU, private, large or small, the interest rate cycle peaking out and then coming down, corporate capex picking up is a common theme which will benefit all these banks. And second, it's actually very interesting to note that, in fact, the large companies across board, the industrial space actually did not do much capex in last year. The capex was only about 5-6%. The capex mainly came from the mid-cap space, where the capex was about 15-16%. Now, some of these banks, like the Federal Bank or the smaller names, mid-cap PSU or private banks, they lent to the mid-cap companies. And therefore, their loan growth was stronger and therefore will continue to be stronger. Now, the large cap companies will hopefully join the party as interest rate peaks, and that will benefit the big cap banks.
All right, stay with us, Chakri. And as we head into another earnings season, let's take a look at some of the key EPS changes that we've seen ahead of Q3. We've got Sharad joining in with those details. Sharad?
Well, yes, in our analysis, we have taken the stocks tracked by at least 10 analysts, and the universe comes to almost 309 stocks. Almost, you can see a 3 to 4% upgrade coming in when it comes to the healthcare, materials, and the real estate segment, while it has been flattish when it comes to the energy segment. Now, importantly, we'll be looking at how the EPS changes have come up for the 12-month forward basis, and this is coming right after the earnings of Q2 till date, and you see the majority of the upgrades coming in, almost 87% of them. However, downgrades are on the lesser side, coming at almost 7% odd. But the question remains is, which are the stocks which have seen a top EPS upgrades coming in. And if you look at it for the stock specific movement, we are having stocks such as Bharat Dynamics, ACC, Mankind Pharma, Mahindra Logistics and Sagar Cement. And over here, the larger upgrades are coming in, especially in the pharma name in Mankind Pharma. Also, the cement names ACC and Sagar Cement also come in this pack. Now, which are the stocks which are seeing the top EPS downgrades coming in? That is something to watch out for. And the list, of course, is having consumption names mostly. If you look at it, V-Mart Retail is there, ABFRL is there, and even restaurants brand Food Asia is there. That is where we are seeing a significant EPS downgrade coming in over the last 1.5 months, which we have seen. And surprisingly, Paytm also comes in the list with almost a 42% cut.
2% cut. Paytm. Chakri? Zomato has gone the other way, Paytm is going the other way. They both, when the fintech and the consumer tech space corrected, Paytm and Zomato, they both came down. But on the way up, there is a big divergence. Has the business model of Paytm, has that got challenged after what the Reserve Bank of India has indicated?
You're absolutely right, Nikunj. That's partly, that's hit and will continue to hit their margins of their business. The cost of capital, the cost of doing business has gone up, and being basically intermediary pass-throughs, what they keep in between as the spread has gone down, will likely to remain down. That will require them to raise capital further up, furthermore. Now, for them to do that in the current levels is actually quite challenging. On the other hand, Zomato is a more pure consumer business, which has benefited, and therefore, and Paytm will probably continue to face these woes until they have their own in-house products, which is not their underlying business model.
Just looking at Avenue Supermart, let's just bring out the last 2-year chart. In fact, I think, and the stock hasn't done a whole lot. Of course, in the last 3-odd months or so, you've seen a bit of a pickup. And the Q3 update is pretty interesting. They're saying that the sales growth rates has declined sequentially by about 17%. Revenue per square feet, they're saying, is going to continue to improve. And analysts are saying that DMart's grocery-first strategy is going to re-engineer growth, and the throughput is improved but remained below the pre-COVID-19 levels. Chakri, the business clearly seems still a bit of a struggle. What do you have to say about Avenue Supermarts now, around 4,100 levels?
I think the valuations have corrected fairly significantly. The company has, kind of suffered because of an overall weakness in the consumer, and also given that the markets that they target in the smaller cities and towns. With an interest rate cycle, again, hopefully this whole thing hinges on, if you look at yesterday's US data, where unemployment is picking up and PMI is slowing down, which is all positive for negative for the economy, positive for the interest rate cycle, and therefore an interest rate. When that cut happens, and that's important because these Avenue Supermarkets operates on very low margins, and therefore their cost of capital has to come down. Interest rates, net working capital costs have to come down. So I think we have to wait for that, which is probably at least another quarter away.
Let's look at, again, something which you in a sense have mastered, identifying long-term breakouts. We've spoken about Bosch, that how Bosch is coming out of this sleepy hibernation after 7 or 8 years. Any other stocks which have potential to come out of their sleepy hibernation of 3 to 5 years? Could DMart be one of them? Nooresh?
So DMart is something which looks more sideways and can continue to remain in that band for a much longer period. It had a classical top in 2021, so not expecting DMart to actually turn around in the near term.
The first part of my question, which are some of the large cap stocks which have hibernated but are now ready to go?
So I would go with a lot of names on the PSU side, something like ONGC, which has done nothing. That is one. And consumer durable as a sector is looking promising, right from Voltas to a Symphony to various names like Crompton Consumer. So consumer durable space, and then FMCG. So FMCG as a pack, if you look at Hindustan Unilever, it's gone nowhere for the last 2 years. And also for the last 4 years, it topped out around 2,500 in 2020. And since then, it's gone nowhere. You can look at a bunch of names like Marico, Dabur, etc. So I would be looking at FMCG and consumer durable space as a large cap or mid cap names which could actually get out of hibernation.
The segment which has really come to the fore after being hugely beaten down, post the global majors gave their guidance cuts has been the chemical sector. Now, most chemical companies are now looking at diversifying. They're eyeing the EV battery value chain as well. Chakri, you think chemicals merits a relook selectively though?
I mean, you're right in your observation. The sector has not done well. The valuations that actually still have not connected that much, given that the revenue top line has slowed down quite dramatically. Many of the export-oriented names, their recovery is still a couple of quarters away. Some of the companies like Tata Chemicals, they have forayed into doing chemicals for the EV industry, so those companies will benefit. The earnings recovery is still a couple of quarters away. So against that backdrop, we were recently looking at some small company. It's a Gujarat Themis or something. Those kind of companies, they're more. I mean, I didn't want to talk much about it because it's a small company. But companies like SRF, PI Industries, their valuations have corrected only in line with the earnings fall. So I think we will still have to wait by the sidelines for the chemical companies.
Give us your top large cap idea, top mid cap idea, and a top small cap idea for 2024.
The mid cap idea is like a company, Sterling Wilson. This company now makes it's in the solar industry. They benefit from a fall in solar module prices. Reliance Industries owns about 40% of the company itself. Reliance is going to have a very big push into green energy. So some fraction of the order of their overall order book was likely to come to Sterling Wilson. It has both a domestic-facing business as well as an international Africa business. Cash was an issue, which they recently did a QIP, and therefore the balance sheet is strong. So it's a structural story which valuations on their side, business secular on their side. I think stock can do really, really well from current levels. Amongst the large cap, I think SBI and ICICI Bank, both valuations on stands, very strong balance sheets. I think that and in the small cap is we're talking about this one very small company called Gujarat Themis. It's a chemical company, since we talked about chemicals earlier. It had fallen off the cliff. Now valuations are on their side, and they're beginning to get some export orders and also orders in this space.
Chakri, good to have you on the show. We'll let you go on that note. Good speaking with you as always. Let's get in some mid-cap ideas as well. Kunal, what's on your list, given that you're also recommending keep your tilt towards the large caps?
Yeah, so from the mid-cap arena, it's ABFRL, which yesterday gave a breakout. In fact, it was a very strong price volume breakout. The stock coming back towards 238 to 40 levels on the spot basis. Excellent volumes for the stock seen comparatively over the last many months of underperformance for the stock. So that's clearly a sign of a breakout. Would suggest a buy with 254 as a target for ABFRL and stop us at 236.
Right. And Nooresh, what about your mid-cap strategies?
So that would be a buy on Symphony Limited with a stop loss at 870 and a target price of 1,000. The stock has been on the lower end of the range for almost many years now. The stock was at closer to this 800 mark in 2015 bottoms, 2018 bottoms, and in 2020 as well. And in 2020 to 23. Yesterday, the stock saw a large volume jump up, and previous couple of weeks back also saw a big volume jump. Should be a breakout trade about 920, 930 levels. So a preemptive buy here, stop loss at 870, target price of 1,000 plus.
Let's take a very quick break on that note. When we come back, get set for the market opening this Wednesday morning.
Co-powered by Century Laminates by Manish Malhotra. Fashion for your furniture.
We believe light is more than just illumination, and Opto technology can create a safer and more delightful world. Polymatech's Opto semiconductors promises a brighter future for both outdoor and indoor spaces. We prioritize safety, efficiency, aesthetics, and overall delight in our lighting solutions. Whether visible or behind the scenes, Opto semiconductors are everywhere.
Well, it seems like we're headed in for a very flat Wednesday. At least that is what the pre-open rates seem to be indicating. But while we give them some time to settle down, let's tell you what else is happening outside the world of equity markets. And a Japanese Airlines plane burst into flames after a collision with a smaller Coast Guard aircraft on the runway at Tokyo's Haneda Airport. All passengers were evacuated safely before the plane was entirely engulfed in flames. But 5 of the 6 crew on the Coast Guard plane died. Also, scenes of devastation emerged along Japan's western coast on Tuesday as rescuers raced to save residents trapped in the rubble of a 7.5 magnitude quake that triggered multiple aftershocks. Meanwhile, at least 55 people have been killed by the earthquake so far. Also, residents in the national capital woke up to a very chilly morning amid further dropping of temperatures. The thick layer of fog over Punjab, Haryana, North Rajasthan, Western Madhya Pradesh, central parts of Uttar Pradesh were also visible. In Noida and Greater Noida, the administrations have ordered schools to be shut up until class 8th till January 6th. Meanwhile, several trains and flights from Delhi are delayed because of low visibility amid the dense fog. Also, the airports at Hyderabad and Bangalore have been ranked 2nd and 3rd among the top 10 global airports in terms of operational performance and punctuality. Kolkata Airport also features in the list at the 9th position. Minneapolis Airport in the US has topped the list.